What's good, y'all? It's Joel, and I'm coming back at y'all with another video. So with this video, I'm basically going to be doing a recap of the trade I took on November 16th, Thursday, November 16th. This was last week. Um, it was the only trade I took for that week, and it resulted in a win. So I wanted to provide a breakdown for you guys so you can see the logic and you can see the adjustment I made to my strategy, which now incorporates using the daily time frame. So, the trade was taken on Nas. So before we begin, just wanted to jump right into Forex Factory. So as you can see, obviously all these events happened because this was all last week. But I wanted to give a quick breakdown of what the week entailed. So Monday, November 13th, there was I was traveling, so I wasn't behind the computer. And then the 14th was my birthday, but the 14th I wouldn't trade anyways because it's core CPI. And whenever it's core CPI, I also don't trade the day that follows, which also happens to be core PPI. So basically, I didn't trade any of these days. And then I showed up to the charts on the 16th, which is when I found the setup, which I'm going to show you guys today. So jumping right in for Tuesday, November 14th, because it's core CPI, we usually expect price to move up aggressively in one direction, and then core PPI might be like a liquidity grab on both sides, but we'll jump in to see. So just my initial thoughts on price, right? I noticed here that since the end of October, we were aggressively pushing bearishly, right? Um, and it looked like we were going after this high up here. So this aggressive bullish candle right here, this is the 14th. This was the CPI day. It was an aggressive push up. So once I saw that, I knew that price wanted to go clear these highs right here, which this is a daily high, which would have a lot of buy side liquidity, a lot of resting orders, right? So I seen price go up here, and then I seen on Wednesday, right, which is the core PPI event, I saw that price came up and spiked this daily high, basically activating the orders, and then as you can see, price essentially rejects the high. So because price spike, like price didn't aggressively displace higher and close above this daily high, I anticipated that price um likely wanted to reverse from this level, right, and at least give some sort of retracement. So that is the thought process that I had going into this day. So we jump to lower time frame, right? Even then we see here price came up and then price pushed down and broke this low right here in our market. So you see it, um, right? So price came down and basically broke this low as well. So I was already pretty much bearish, at least on the short term on the daily chart, right? Because you see it wicked and then started reversing. So I was already bearish. And as you can see, so on this day, this is Tuesday, so this is core CPI. You're seeing once it hit 830, price aggressively pushed up. So this was a sign that price wanted to go higher, and then as you can see here, right at the 830 candle, this was the quick spike. So if I show you, right, if I jump down to the 1 minute chart, you see here literally this all happened within 1 minute, right? Price came up, flew who knows how many pips, and then just started rejecting after the liquidity grab, right? You start seeing price move down slowly, slowly, slowly. So I was already bearish on price, so I'm expecting the same bearish narrative to continue, right? Because I'm bearish, I'm only looking to take price lower, right? It's really that simple. So as we get to Thursday the 16th, right? Before we start, I'm already seeing equal highs up here, right? Clear as day. I'll just mark that with the blue line, right? Literally equal highs. Like if I jump down to like the 3 minute time frame, right? If you look at my cursor at the top left, the number next to the H, right? You see 8132, 8132. So once again, the cursor, the numbers up here, these make perfect equal highs, which is great because if I'm bearish on price, I want to see buy side liquidity get rated before the push lower, right? So if we fast forward a bit, go back to 5 minute time frame, right? We fast forward a little bit, we fast forward to 830, right? So this 8:30 move, this was the news event of unemployment claims. So as of right now, this is the lowest level right here. So right now we have our pools of buy side and sell side liquidity. Remember, because I'm bearish, I want to see buy side get taken, and then I want to see a break lower to then ultimately grab this level down here because this is our sell side liquidity, right? We're bearish, we're expecting price to go down, so I want to see price push up and then deliver a break of structure lower. And then at that point, right, if we take a trade with a break of structure on the lower time frame, then we have our lower time frame and our higher time frames um, aligned, which would increase the probability of the trade, right, that we're trading with the trend. So this push up was 8:30, right, and then we're just gonna keep fast forwarding it one candle at a time to see what happens. So perfect. At 8:45, we see that buy side liquidity gets taken. Now, what we want to do, we want to wait to see what happens at the 9:30. We want to see this liquidity pools remain intact. We want to see after 9:30 to give us another push higher and make the high of the session before breaking down lower, right? So I'll just continue fast forwarding. So we don't care about any of this stuff, right? We want to see what happens after 9:30. So this long wick here was the 9:30 open, right? Which it did not clear this liquidity, which so far so good, right? I want to see this high get taken, which it kind of makes like equal high. I mean, they're super small, but it makes an equal high up here. So we want to see after 9:30 price come up, clear this level, make the new high of the session, and then give us a break of structure lower. So now we'll continue pushing forward, right? But you see price is getting close to this liquidity pool, but it's not tapping it. What it's doing, it's obviously trying to induce sellers here, but it's also trying to build a narrative for any traders that want to buy. So for example, right, you have like your trend line traders, people that think price is going higher, so they're buying, buying, buying. That's what the market is doing. But we know, we already have an idea as far as what we believe the market wants to do, right? So there it gives us our push higher, right? Clears these highs. So now we basically want to stock price until it gives us a break of structure. Now, the new rule that I have is that for a structure point to be considered break of structure, it needs to appear on two different time frames. So for example, on the 1 minute time frame, if we look at this low, this was technically the lowest low that was formed before this high was cleared. But if I go on the 2 minute time frame, for example, that low doesn't exist. So I would not consider that to be a valid structure point for a break of structure. If price goes under and breaks this level, I need to see the swing point to appear on at least two different time frames. So then I would consider that a valid structure point that can, count as like a break of structure. So you seeing here, highs gets cleared. Then with this candle, another high gets cleared. Right. So we're starting to see like this low, which doesn't appear on the 2 minute time frame just yet. So this wouldn't really count as anything. Right, so if we go on the 2 minute, right, everything's covered. So even though the structure point appears on the 1 minute time frame, it doesn't appear on the 2 minute time frame. So this would not count as a break of structure in my eyes, right? We just sort of sit back and watch price, which it worked out for us, right? Because if had we just jumped in saying, oh yeah, look, this structure point got broken, we would have resulted in a loss, right? So we just got to be patient. Another push higher, right? You see it clear this level and then this became the lower structure point. So now we skip to the next candle, boom, right? We see an aggressive push up. It made the high of the session and then an aggressive move down and then another aggressive candle down. So with these two candles, there's no question that there was displacement, right? Um, you're seeing a big massive move down, another massive move down. Even though it wicked, it still broke this level significantly and left an obvious fair value gap. Like you can't miss a gap here. So if I jump on the 2 minute, you're seeing that price makes a swing as well, right? One candle here, the lowest candle here, and then a higher candle, so it makes a swing. So, and then obviously with this candle breaks it. So you can obviously see with this right here, right, you can see that this low gets cleared with this candle, right? It makes an obvious low. And then on the 1 minute time frame, it makes an obvious low as well. So this fits the confirmation of a valid swing point in my eyes, and a valid structure break because obviously it broke it on 2 different time frames. So once this happened, I knew this was the opportunity to take a trade, right? And I like to color code everything as you guys have seen from all of my videos, right? So once this structure break happens, I already know taking a short right here, stop above the high, and then my final take profit um, right here, right? I like to go for low hanging fruit. I don't necessarily like putting like a target on a daily time frame, unless the daily time frame is pretty close to like the current day that I'm working with. Um, but this is sort of the setup that I'm looking at. Once this 1 minute candle close right here, that's when I immediately, put in my sell limit. Or, obviously you can have this trade plan with a market execution, but here you see a 1 to 3 risk reward. And so once you have this set up, right, you can look for different targets. So for example, if go to the 5 minute time frame, right, I'm seeing an obvious fair value gap here, or in the 4 minute time frame, right, this is what the gap looks like. So you can use this as a level to take partials. Right? You could take a partial right at a 1 to 1. You could take, I don't know, 25%, 50% off this level. Right, then obviously you could take it low down here or just take the full partials here. So it all depends how you want to approach this, but this will essentially be my trade setup. So if I continue fast forwarding, you'll see what happens. So this candle technically taps us in. We'd be in the trade um, with this candle right here. So now once we're in this trade, now the question is, how do we manage the trade? So I stated right here, this is one level we could take partials, right? This fair value gap. Then obviously there's some lows here if you want to take small like partials, but this low is the most extreme low out of these lows, and then the final target is here. So for a trade like this, I probably only take partials around this fair value gap, and then the final target would just close here. So as far as moving my stop loss to break even, I like to move my stop loss to break even once a larger swing point has been cleared, right? So if I'm taking price for a sell, I want to see price move down, and I'll sort of draw this out so you guys can see, right? I want to see price move down, maybe do some sort of retracement, and then break a larger swing level. And then once this level gets taken, then that's when I move my stop loss to break even to have a risk-free trade, right? So you can see here, price taps us in, and price, well, it taps the fair value gap several times, which is normal, right? Fair value gaps are supposed to act as traditional support and resistance. So you're seeing here, right, a few minutes in, so price came in, tapped the entry, went down, it went back up, tapped the entry again. So you had another opportunity to enter the trade at this level. Then you see price come down and blast through this low. Now, the reason why I didn't move my stop loss to break even, because on the 1 2 minute time frame and even 3 minute time frame, right, it made a smaller, like a small swing low. But this is really a small swing low. Like I want it to be a super obvious like swing position. Um, sorry, a swing. I want it to be a super obvious swing low that when it breaks it, right, like that there's no reason for price to want to go back unless like price is reversing, right? I don't want to see like a small swing low like this get taken out because the price just came down a couple pips, it retraced a couple pips, and then it broke down, right? So then we see price dig right into the fair value gap. So if you wanted to take a small partials here, you could, but I personally wouldn't move my stop loss to break even yet. Even though price came down to like 2/3 of the full trade, right? I still want to see that larger swing position get taken out because I don't want to move my stop loss too early and then get kicked out of the trade prematurely, right? So at this point, I still have, my risk, full risk trade open, right? So you see price starts retracing. So this is what I mean, right? Like this this low right here, this is the level that I ideally would like to see price close under so that I can move my stop loss to break even, because if price rejects the fair value gap again and then returns and closes under, there's very little reason for price to go back up, and then at that point, I would take a strong partials because this is already 2/3 of the move. Take a strong partial here, and then, pretty much just let the rest ride out to the final target since it's low hanging fruit, right? It's very possible for price to go down there since this isn't like a massive trade as far as like movement. Price comes up, it taps the fair value gap for the third time, right? So if you didn't get in either of these times and you had a limit order set, hopefully it would have tapped you in there. Once again, another tap, right? So price gravitates, it's normal for price to gravitate towards the fair value gap and for the gap to act as resistance. So you're seeing price came up and tapped it several times. Push down, right? Price came back up. We, experienced a little bit of drawdown, but no big deal, right? That's why we have a stop loss at the high in place, um, to, as a safe location to put the stop loss. So see here, right? Then we get the aggressive push down. It broke structure at this level, which is a good sign, right? We want price to be bearish. See another push, another massive move, right? So then once price close under, right? This candle close under this low, that is when I move my stop loss to break even. And I also closed off partials. I think I closed off at least like 50% of my position here, which, if I look at it, that's about a 1 to 2. Yeah, so I closed off at least half my position at a 1 to 2, and then this point, right, we're risk free to the final target, which will serve as a 1 to 3, and then a couple candles later, right, you see the final target get smashed. So this was a beautiful setup, right? It gave us all the confirmations that we were looking for, right? On the higher time frame, we were bearish because we saw that price cleared a, a daily high and literally rejected off of it. It just wicked really fast and then just pushed down. So that was a sign to me that in that moment in time, price wasn't ready to push higher and didn't want to, right? It rejected. So that told me that price was bearish and that it wanted to continue bearish. And so with that logic, if price is bearish, I want to see, like when the New York session comes, I want to see buy side liquidity get taken. I want to see price push higher so that it can take buy side liquidity and then break structure lower to the downside so that it can be bearish on the lower time frame, right? If price pushes up and clear buy side liquidity, that's the perfect counterpart so that smart money can get in and place their sell orders. So basically, you just want to trade in alignment with smart money. And so that's the logic there, right? If I'm expecting price to go lower, I want to see a push higher before the move down. And so that's what I'm waiting for. That's what I stock price for. So once I saw that break of structure, this aggressive candle, and the gap, the massive gap, the obvious gap that it wants to go lower, right? That's where I took the sell. And then as you can see here, we just dealt with a little bit of drawdown, which is expected, right? Since the fair value gaps are like magnets, right? This serves as like resistance to price, and then you see price reject off and just literally melt down to the final target. So, um, basically, what I was seeing, what I was seeing with this position is this, um, is essentially this. So you guys can begin seeing it visually. I'll let it play out a little bit, until like the end of the session. Yep. So just so you guys know, um, you know, the trading hours is from 9:30 to 11, so that's when I look for a setup. So this setup technically activated at 10:09, but the last opportunity to get in was at 10:30. So pretty much from 10:09 all the way to 10:42, so a little over 30 minutes is the entire time frame for this whole trade to play out. And I was able to make, I took partial, so it was about 1 to 2.5 times my risk. But if you just held it to the full target, which is a very achievable target, you would have walked away with a 1 to 3, so triple your risk, which is absolutely phenomenal for a day trade. So just wanted to showcase this to you guys. This is essentially what I see price and see it visually. So basically, and I guess here as well as well, right? So this is what I was seeing with price, right? We started seeing like a consolidation, this level, obviously this level here and this level here. We started to see consolidation. We were bearish on price, so I was anticipating price to go lower. And you're seeing up here after 8:30, which is a stop hunt, right? You can expect price to want to go after some liquidity. The reason why I put these squares, these red and these blue squares, is just so you can see how when price goes above these levels, this is essentially like smart money accumulating sell orders. Because if we're taking buy side liquidity, the market is getting flooded with buy orders, right? So then it comes up here, and then you see it again. Market comes up here, gets flooded with buy orders. So the reason why I'll mark this box in red is because this is when smart money gets into sell. So this is where all the selling is done up here. And then once price comes down and clears this low, this is where they buy back their orders. So essentially, like they're getting in a trade with it, and we're trading the same direction. We're getting in and out of the trade with smart money with the banks. So it's a very big sort of what's the word I'm using? It's like a mind shift, a mindset shift, right? A paradigm shift. That's the word for it, right? It's a massive paradigm shift because usually if you see price going higher, 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 most traders are saying, "Oh, price is going higher. It's gonna continue going higher. Let's buy price." But when I'm seeing price go higher like this in a bearish market, I'm immediately thinking sell, and I'm waiting for price to break structure to then enter for a sell. And then when it goes down to sell side liquidity, that's when I'm looking to buy my order back and get out of the marketplace. The same way the market sees it, right? So you're seeing at the top here this blue dashed line. This is the buy side, but then you're seeing a red square, which are the sell orders. So you activate buy side liquidity to put in your sell orders, and then you go into sell side liquidity to then buy it back, right? To get your to 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 buy those orders back and get out of the market. So you can see how price is playing both sides of the marketplace, but this is how the market operates, right? The market operates with liquidity, with orders, and with imbalances, right? Inefficiencies, right? Because the market wants to price itself efficiently to give the opportunity for both buyers and sellers on each side. Um, and then they'll enter here and then get out here. So that was pretty much the setup. 1 to 3 risk reward, amazing trade. And that was the only trade I took for the week. So, 1 for 1 for the week. No need to force anything. No need to take trades if there's nothing to take, right? There's no opportunity. But this was an absolute amazing opportunity. Textbook entry, textbook exit, super, super straightforward trade. Um, and yeah, I just wanted to present this to you guys so you can have some knowledge so that you can hopefully see the market the way I see it. Um, and begin to like either adopt this strategy or take nuggets with you to apply it to your own trading. So that's pretty much that. If you guys want some homework to try to see if you can figure out the setup that happened on SPX. So on this same day, Thursday, November 16th, there was also a setup for the S&P 500 on the same day within the same session. So I'll leave that to you guys if you want to try to do that one on your own. But it was literally virtually the same setup that happened on SPX at the same time. I didn't trade both. I only traded the NAS because the NAS I just preferred everything here, but same setup played out to the T with S&P 500. So that was the setup there for you guys. Um, if you enjoyed the video, do leave a like, subscribe, comment, any questions you may have. Um, I'm really hoping that these videos you guys find helpful because for me, I'm honestly just trying to simplify um, like these concepts that can take quite a while to learn and understand, right? For me, it took many months, at least over a year, for this stuff to begin clicking. And I'm just trying to simplify this to someone who may be wanting to learn how to do this on their own. Um, and or just someone out there that just wants to know more about trading that's never seen trading or that just either struggling to be profitable or just haven't found a strategy that works for them. So I'm honestly just trying to you know, once I learn this information and it's helped me out, I want to be able to pass this along and help someone out as well. So once again, this was a trading recap for Thursday, November 16th. Do let me know if you found this helpful. Once again, it's Joel, and I'm out. Peace.